Good day, everyone, and welcome to another episode of Skytale Insights. Today, I'm actually co-hosting with our Director of Investment Banking, Miguel Mireles. Excited to have you here, Miguel. We've done one podcast, never hosted with you, so this will be fun. We're also very pleased to introduce Vik Venkataraman. Vik is head of Provident Bank's Middle Market Healthcare Services. Vik, you're in Dallas. Thank you so much for popping by. Would you mind introducing yourself and maybe a little bit of what you do within Provident Bank a little bit?
Yeah, well, first of all, thanks for having me here, and obviously good to see you as always, Miguel.
Likewise.
So today I lead Provident Bank's Middle Market Healthcare Services Group. I actually recently joined the organization in June to build out a platform for the space. Prior to joining Provident Bank, I actually spent most of my time at PNC in the healthcare banking group most broadly, leading sales teams, building various businesses. And then prior to that, I was actually self-employed and had a small boutique healthcare advisory firm, advised healthcare organizations on exit strategy, did valuation work, managed money, and then I exited that firm in 2011. So excited to be here.
That's great. I mean, so you've been in healthcare for quite some time. It's
20 years.
Like entrepreneur.
I'm only 21.
You've
so.
done it all. Entrepreneur, PNC, now Provident. And what's your aim there at Provident? What are you building?
Yeah, so the way we're building the platform for middle market, maybe just context. So Provident is a sort of recent merger of two comparable sized organizations, Provident Bank and Lakeland Bank. $25 billion asset organization. So small bank, big business. And they've had a healthcare domain expertise, but in different areas than where I've had my expertise over the years. So they're focused in the senior space, nonprofit area. They've done some ambulatory surgical center type work, some behavioral health, but largely not in what I'd call the sort of cash flow healthcare business space where I've spent most of my time. And so that marketplace that I'm focused now on is what I would call lower middle market and above in the healthcare provider sector. The center of that wheel, if you will, are organizations, providers that support the patients directly, patient care. And so dental groups, specialty physicians, PT groups, and behavioral health as well. Obviously, hence the reason why I'm in Dallas for a behavioral health conference. And then support organizations, healthcare support organizations, revenue cycle management companies, healthcare tech-enabled companies, healthcare tech companies, some of that AI space that everyone's so intrigued about. So that's the sort of broad world that I support.
Fantastic. So yeah, I'm really excited to get into this because that, a lot of those is where we like to play as well, and some of those we're actually exploring. So I'm sure we'll get into the conference and how it was. And as you mentioned, that's why you're in Dallas. I know you're about to head to the Northeast. So again, thanks for spending time with us.
Yeah. Thanks, Vik, again for coming on. And I know you've been traveling a ton. You've been at the McGuire Woods Conference in Charlotte. You're here now in Dallas for the Behavioral Health Care Conference. Would love to learn what, some of the takeaways have been, whether it was at the McGuire Woods Conference, Behavioral Health Conference. It would just be good to get a general sense of the pulse of what you're hearing out there on the market.
Yeah. So first of all, both conferences that I've been to now here in Dallas is the Behavioral Health Business Invest Conference. So mostly comprised of PE folks, M&A folks, bankers, and some provider groups as well that are in the space, looking to attract capital and partner with other organizations. McGuire Woods was a similar conference, Healthcare Growth and Finance Conference, and so some similar sort of parties and organizations. I'd say there's just broadly a few common themes in both conferences. One is renewed optimism in deal activity, right? I think everyone's looking at the macro marketplace, seeing where rates are, and maybe where rates are looking to go, sort of on an anticipated basis. And so a lot of the conversation was around Q3 deal activity increasing and what we may anticipate heading into 2025. A lot of dry powder from private equity is out there, and so that was a large part of the conversation. I think secondarily, what came out from both conferences was a lot around due diligence on some of these provider organizations, and so there's an increased scrutiny of deals in the pipeline, taking a look at everything from operational oversight, management teams, to CPT codes and how organizations are managing, where they're playing in the marketplace. So those, I think, are two big themes. And then the last one is just the regulatory environment. I'm sure we'll get to some of that in this conversation, but that was an interesting part of the dialogue. I think the broad consensus in both conferences is that there may be an adverse impact with some regulations that may or may not come about, but the scale of that impact is probably not as great as perhaps once thought. And so hopefully that leads to no stifling of activity in the marketplace.
Yeah. Recently, there was the recent veto of AB 3129 in California. Governor Newsom vetoed that. Any talk around that of that could be potentially tailwinds for those that were maybe hesitant to invest in certain states? Anything that you heard around that?
Yeah, really important question, and certainly a lot of conversation. And maybe just for the audience's benefit, right? What is AB 3129? And maybe even just taking a step back, it's a bill that was proposed in California, to your point, vetoed by Governor Newsom pretty recently. But multiple other states have looked at and are looking at potential similar comparable legislation. But broadly, it's more about healthcare entities doing acquisitions in the healthcare provider marketplace with a particular focus on private equity organizations and their involvement in those transactions. And so essentially the ask was that these organizations seeking to invest and or acquire in the marketplace are informing the state attorney general's office and then could pose a circumstance where the AG blocks the legislation. So that's the background. And again, I'm not an attorney, so my base understanding of the legislation, right? But what are the sort of pros and cons of that legislation, despite the fact that it's been vetoed? If it comes about in other markets, other states, what could be the sort of impacts? I'd say there's pros and cons. I have some unpopular opinions on the topic, but some pros and cons. I'll start with some of the cons. And I think they're pretty obvious, sort of simplistic. The first is just transaction time. So the more these transactions are occurring, you would anticipate the sort of going back and forth with the AG's office to take a bit of time. Does that ultimately conclude a 90-day cycle, 120-day cycle to close on a transaction or more? That's unclear, right? And so I think that is a particular adverse impact on smaller provider groups, where I tend to play a lot more in the sort of emerging middle market space, where, by the way, I think there's a need for greater liquidity. And we don't have enough liquidity partners in the commercial banking sector yet there today. But I think there's a particular adverse impact on those smaller providers. And most of that's because they're looking for capital. They may be, arguably a little bit more desperate for scale and growth. And then the transaction costs, or I'd say the sort of second con, if you will, the transaction costs would anticipate it to be, greater too. So legal expenses, finance expenses, and they may not have the wherewithal yet today to sustain those higher costs. I'd say on the potentially positive side, arguably, I don't know how positive.
Is this the controversial part?
Yeah, this is the controversial part.
Yeah, we love provocativeness on this podcast because we want original thought, creativity. So let us hear it.
Well, let's do it.
We love it.
Well, I think there are, and certainly there's a view that there are really large healthcare organizations that continue to scale and perhaps monopolize markets. And so some of those organizations that are looking at sort of multi-state transactions as they enter a new marketplace, because of the complexity inherent in going to a new state with new legislation, new regulatory requirements, it may not necessarily block, it may slow down their process, and then therefore their inclination to pursue deals in those other markets. What that hopefully might end up doing for organizations that are in those markets is increase competition, improve sort of price competition, with the reduction of sort of the monopolization of organizations in that space. So I think that's good for patients, right? There's sort of a patient-centered focus there. Patients get better access to healthcare as a result. So again, unpopular opinion, I don't know that the regulation, whether it's in any state, would have a tremendous adverse impact. I'd say it's probably slightly more negative than positive broadly, so maybe in line with consensus. But I think there are some pros in that as well.
Great.
Yeah.
Great. No, I'd love to hear that. Would love to know if there are any specific verticals you've been spending time. I know you were just at the behavioral healthcare conference. Any that you've spent time recently, and then I guess the flip side to that, or what are some that you plan to spend a lot of time in over the next 12 months as you look ahead?
Yeah. So as I've come into Provident, into the organization, I've been largely focused on areas where I've had a lot more expertise. So I'd say in the DSO dental space, predominantly in the emerging DSO space. Certainly the specialty medical space, looking at pan-interventional medicine as an example, wound care as another example, and the specialty pharma space. I've seen some good activity there in the infusion side of the business. Where I'm keen on building more, not only of my own credibility in the marketplace, but where I think there's activity and opportunity, some white space, if you will, I think is, again, behavioral health, tremendous opportunity. The last 10 years, I think there's been a greater need, certainly post-pandemic, for improved access to mental health, among other areas of behavioral health focuses. I think in part, you'll find that there's less of a stigma in the environment today. And then, sort of how these organizations are operating and the nuances within it pose, I think, some interesting opportunity. And then I think, you guys know all too well about Metaesthetics, have now just released that white paper, which I need to go and deep dive in post this conversation.
Thank you for the plug.
You got it.
Yeah.
You got it. Not that you need it. It's your podcast. But I think there's a lot of opportunity there. And it was actually, there's some parallels to the behavioral health space and broadly the consumer health marketplace. So, organizations that are really scaling up in the metaesthetics space, I have some maybe concerns about the wider variance of higher performers financially versus the lower performers. Most of that comes down to their infrastructure, their management. Is there a good sponsor involved? Do they understand the space? But if those opportunities exist and those positives exist, I think metaesthetics is a tremendous marketplace.
Great. Yeah. Would be interesting to see if the change in the interest rate environment is going to affect any certain verticals or any specific verticals more so than the others, just given that some are maybe a little more readily available to, as far as where their value is more through financial engineering versus from a roll up versus actual value creation from the type of sector that they're in. Do you have a thought on that, on any specific targets that could be susceptible to that?
Yeah, I think, I think on the whole, I don't anticipate a very significant difference in any one sub-vertical for healthcare services. I think broadly everyone will benefit from decreased rates. I think you'll see a lot more, certainly, activity from sponsors, independent sponsors, private equity, and certainly strategics who've, again, been sitting on this dry powder looking to make some acquisitions or investments. Where I think you'll probably see slight incremental growth is in spaces where, the consumer marketplace has a bit more disposable income than they had in the last 12 months to 24 months. And so that could be in the sort of consumer discretionary marketplace of healthcare, consumer healthcare more broadly, could again be in the metaesthetic space. If you think about consumers and users of those products and solutions or services, it's in the wellness space, it's in preventative care. Those are sort of ancillary in addition to what they're normatively going to with their primary care doctors, their plastic surgeons, their dermatologists. And so this sort of incremental opportunity to spend a bit more on those consumer needs becomes attractive. And so I would anticipate top line growth in those organizations. And so again, metaesthetics is a great place, but not only that, it could be the dental space. You may see parts of the dental subsectors in that world also start to improve.
Great. Yeah. Now I'd like to get back to maybe more controversial topics.
Sure.
We were able to have a nice dinner over at Nick and Sam's Monday, and one of the topics that we touched on was AI.
Indigestion.
Yeah, was AI and its impact in healthcare. Would love to just get your thoughts, either broadly or any specific topics, how you think it will impact those spaces.
Yeah, so I will say at the McGuire Woods conference, I heard a few folks delve into the opportunity for AI to sort of improve efficiencies in the healthcare provider landscape. And they were more tepid on where they believed AI could transform these organizations in the near future. I think the view was, hey, it remains to be seen. Maybe it's 2 to 3 years out where we'll see some impact. It could be in the revenue cycle management side. It could be in the patient engagement side. My view is a bit more aggressive. I think there are far more organizations investing into AI. I mean, again, I think we all know AI is a sort of really broad term today. So we're talking about predictive analytics. I mean, there's a whole wide range of sort of topics that AI could allude to. But my current view is many organizations are aggressively investing into automation. They're looking at data and data analytics in really thoughtful, aggressive ways. There are particular healthcare tech organizations that are only focused on AI. And so I would anticipate that probably in the next 6 to 12 months, you'll see some really interesting healthcare tech organizations make a bigger splash using AI tools to enable either, again, patient engagement is still a really big topic, a really hot area across all healthcare subsectors, if you will. But I think on the RCM side, you'll see some interesting opportunities too. The sort of insurance adjudication reconciliation side.
So as you're very familiar with at Skytale, we spend a lot of time in metaesthetics, consumer health, dental, and multi-site healthcare in general. Know you're spending a lot of time in there, and we obviously have a thesis in it. Would love to understand, what are some of the things that you like about those spaces that fit with your mandate?
Yeah. Yeah, great question. I'd say, the dental space, more specifically, has continued to thrive. Consolidation continues in that marketplace. Still some private equity organizations and other sponsors who are interested in scaling these organizations. There are very large DSOs. There are many small emerging DSOs as well. And there's certainly lots of smaller dental provider groups, mom and pops, if you will, that are looking to partner, merge, and or acquire and grow their organizations. From my perspective, a lot of that is aimed at trying to drive better patient efficiencies, better patient care. And so that's attractive for the sort of broader demand for dental services. So I think that'll continue. I don't anticipate any sort of adverse impacts in that marketplace. I think we'll start to see more activity in that marketplace. I think where you guys are focused and where I'm more interested in becoming increasingly more focused is in the sort of metaesthetics and consumer healthcare marketplace. I think if we look at sort of macroeconomics, we were anticipating sort of an improved rate environment, and as a result, likely some additional sort of disposable income for the average individual consumer. And as a result, I would anticipate more spending in things like, preventative care and wellness areas that we would anticipate in places like metaesthetics and the consumer healthcare market more broadly improving. And I think that marketplace, more importantly, especially metaesthetics, from my understanding, and again, I'm learning a heck of a lot more about that space day by day, but the innovation in that marketplace is tremendous and continues to grow quite significantly. And so that lends itself to a tremendous growth trajectory ahead.
Vik, Miguel mentioned the spaces that we play in. Are there any that we missed there that you want to talk about that you see as exciting that, maybe if I'm being selfish, that we ought to take a look at?
Yeah, well, I don't know how much you guys are playing in behavioral health today, but I believe that is a tremendous area of opportunity. As I sort of alluded to a little bit earlier in our conversation, there's less of a stigma in mental health. There's more of an opportunity for organizations that are playing in the autism sector, general sort of mental health areas, services like IOP. Those are becoming more nuanced within the behavioral health sector, and favorable margins for those organizations. The ones that have really commanded an expertise in those areas have done quite well, and there's a lot of private equity activity there today, yet again, and I anticipate it on a go-forward basis. So I'd say that's one really good sub-vertical. The other sort of area that I think is still attractive is in the specialty medicine area, organizations that are sort of direct-to-consumer, direct-to-patient, looking at sort of the home health side of it. I think those are attractive. And so, again, wound care is an interesting space. that they're going into homes, they're going into nursing care facilities. Those are areas of increased opportunity. And then I think specialty pharma more broadly. And so I've seen activity in the infusion space. I think there will be probably more activity there, but that's an area of interest as well.
Yeah, we've definitely spent some time in infusion and
Yep.
agree that that's a hot one right now. There's a lot of tailwinds behind that, and will continue to be there for the future.
Yep. And, maybe just a side note on sort of the sort of broader subsectors that maybe are attractive. Coming out of these conferences, and I think we have at Provident Bank, we have a heightened focus on this sort of due diligence side of the house. And so it almost doesn't matter what subvertical in healthcare services an organization is playing in. I think what we care more about is, okay, are they managing the business in an operationally sound way? How are they trending towards industry benchmarks, right? So, we have a deal on the table at the moment right now that's in the specialty medical space, and we're looking at CPT codes. We're asking for production reports. We're saying, help us understand why you're trending in this particular modality above industry benchmarks. Is that a good thing? Is it a not so good thing? Are you taking on too much risk? Are you too far into one niche and not well diversified? So there's sort of risk management oriented questions that we're asking in our process. And then there's questions about capitalizing an opportunity that some organization may have just solved for that competitors may not have figured out yet, if you will. But I think all of that leads to, yes, there's interest in very particular subverticals because of the macroeconomy, dry powder from private equity looking to invest. But there's also, hey, it doesn't matter what vertical it is. Let's be more thoughtful about what we're asking and what we're doing with these organizations.
Makes sense. And on the broader macroeconomic picture, what impact have you seen on rate cuts in the lending market in recent months? And does Provident have a view on what the next 12 to 24 months could look like from a rate cut standpoint?
Yeah. Well, I'll answer the latter part first. I don't know that the bank has a holistic view on where rates are headed. I think broadly the markets are pricing in decreased rates, at least another 50 basis points through the end of the year potentially, and that's largely my view. I'd say on the front end of it, what you've seen in Q1 and Q2 was a quieter marketplace, less activity. Certainly the case as well in 2023, towards the latter end of the year as well. In Q3, we've seen this year a significant pickup in activity and lending volume in particular. We've had tremendous deal flow. Now, some of those sales cycles take a bit longer to navigate through, as we've talked about due diligence and our efforts there. That certainly continues, and I arguably should continue into 2025 and beyond. But I think the deal activity has increased. Sponsors are certainly a lot more engaged. Provider organizations that have been sitting on the sidelines, hopefully investing in their operations, improving their management teams, establishing the appropriate infrastructure, are now able to command maybe better valuations. And now that the dry powder's reactivated and they're starting to put money back into the marketplace, you'll see that increase. And obviously commercial banks like ourselves are looking at senior debt positions and hopefully putting money back out into the marketplace, albeit in the lower middle market, healthcare provider marketplace, as we've talked about in prior conversations. There's just not enough liquidity partners out there. We need more commercial banks in the lower middle market healthcare services space.
We agree with that.
Yeah.
100%.
I don't want too many more competitors,
Right,
but I want a few.
Yeah.
I want a few. Yeah.
Yeah, I mean, on the we agree with that comment there. You mentioned, Vik, when you were talking about the different verticals, that really at the end of the day, you're looking at individual businesses, you're benchmarking them against their specific industry and how they're doing. Now, earlier you mentioned that your focus is smaller to emerging provider groups, which fits perfectly within, especially, I'm trying to think of what our clients would be asking on the management consulting side. They're typically founder-owned businesses that fit pretty specifically into a lot of what you've been talking about. So, if I'm trying to extrapolate questions from their minds, questions that we get, maybe let's start broadly there. When you are thinking of lending and you're looking at these healthcare businesses, what are some qualities and components that you look for?
Yeah. Well, first of all, I think these founder-led organizations are a really attractive area for growth and scale. And so, there's a whole set of criteria that I'm really keen on asking in my sort of initial due diligence process, right? I anticipate, however, that early on in their life cycle, let's just say they're at 1 million EBITDA, 2 million EBITDA, they yet likely lack sophisticated management as sort of infrastructure, right? They may not have a CFO, they may not have a COO yet. So I think I'm looking more at their willingness to bring those types of folks on as they grow. It's less about do they have it today. I cannot anticipate or expect them to have it yet today, but are they willing to have that in place? How are they managing operations? You know, do they have efficiencies? Do they have tools? How are they managing HR staff? Do they have an HR policy that they're adhering to? Do they understand the importance of that? The broader sort of risk management conversation becomes important. So are they looking at cybersecurity? Do they have those types of tools and measures in place? So I'm really looking sort of like, let's just call it protect and grow, right? So are they doing all the right things to protect their organization and help support the scalability and growth of the organization? I think beyond that, there are questions around, do they have the aptitude and the acumen as a founder to then lead the organization to that next tranche, that next inflection point? Do they need capital providers? Do they need sponsors or folks who have that level of acumen? A new CEO perhaps, right? Are they at that level yet? And it just depends on where they are in their life cycle.
Some of those really hit home. A lot of ours are trying to grow and scale their businesses. And a lot of what we talk about is what you're talking about, which is as you grow, as you scale, do you realize that you're going to have overhead from an administrative support perspective and otherwise? Because, we hear it a lot. I knew as a founder owner, as a doctor, what was going on when I had 2-3 locations, but it really gets away from you beyond that. So you really have to invest in a team. And then, it starts getting into, do I bring these people in-house? Do I outsource them? What's the order of things? And it's also an investment, right? It sometimes suppresses margins, and we call that the dark tunnel.
Yeah.
But the ones that are really willing to invest in their businesses, we think as well, it's a pretty good barometer as to, whether they're going to succeed. If you're willing to invest in your business, suppress margins for a bit, for future growth. So those are all great things. And, before I call you, is there anything that I ought to pay attention to?
Yeah.
Certainly those future looking things, but what should my organization ideally look like? Like you mentioned, you don't have to have X, Y, Z today, but what should I have today before I call you to be sure my house is in order?
Yeah, no. So really great question. I think in particular what I do is give you some insight into sort of how commercial banks today, generally and more broadly, are looking at the scaling provider groups, right? And maybe in general, how they transact in the marketplace. I think that has a big influence on how the provider groups today have focused their attention on their own operations. And so the smaller private practice space that, let's say under 10 million revenue, about $1 million or 3 million in EBITDA and under, right? They trade, generally speaking, off of a percentage of collections, percentages of revenue. So those organizations are looking at top line growth. They may have an interest and appropriately so look at operations, but you often find that those providers are distributing every dollar out of the organization, right? And so some of that's just purely for tax purposes. Some of it's because they can and they need to. So the sort of trading on revenue, though, is a different sort of dichotomy or paradigm from the middle market space, right? And so as these organizations get to that next level, they need to understand that the markets now are looking at really multiples of EBITDA, generally speaking, right? So valuations are looking at free cash flow, and they're saying, is there industry risk? Is there, business owner risk? What are the other sort of associated things that may impact the sustainability of that free cash flow going forward? And so I understand that paradigm for the provider group, I think then becomes really important to knowing what to invest in to ensure that their business is ready for that next level. So when I'm looking at their organization, again, I'm thinking, okay, you have a founder or likely, a new CEO in these organizations who's trying to build it. What have they done to date to ensure that the organization is operating as efficiently as possible? What tools are they looking at? It could be they have 3 or 4 locations. They've purchased 2 or 3 in the recent 24 months. They have multiple different practice management systems. Are they integrating those PMs? How are they integrating these PMs? What tools are they using to integrate these PMs? What are they looking at in their staff? Do they have a regional director? Is there a practice administrator in each office? What's the culture of the organization look like? I'm asking a lot of those questions on ensuring that they're ready and prepared to get to that sort of next level.
That's great. Yeah. So make sure that you're not a hodgepodge of practices and it really looks and feels and acts like a single organization, or at least starting to head that way. That's really good advice. Now, what are you going to ask me for? What should I have on hand? I'm sure you're going to ask me for 50 things. What are some things to keep in mind that you think maybe trip some people up that we ought to know?
Yeah, well, I think the basics are just really good financial statements and financial reporting, right? So what you might anticipate is, especially beyond sort of 3 million EBITDA and above, do they have a quality of earnings? Can they engage an accounting firm to really do that appropriate level of due diligence? Some of the other things that I'm looking for are, tell me a little bit about your production volume. What are your modalities of service? What are your CPT codes, right? I want to better understand how they're managing their current sort of practice operations today in that context. And so I might be looking at industry benchmarks. So do they have those sort of PM reports that are generally available and accessible to share and send over, and then have a perspective on it, more importantly. Sometimes it's not just the information itself, it's do you have a perspective on why you're focused in this area and why you're not focused on this other area? And then how do you help ensure that you're thoughtfully diversified, but you're not diluting your niche if you're a niche-focused type of practice or provider, right? I think broadly those are the things that I'm today generally asking for.
And as you look at all these businesses, I mean, that's pretty neat. You probably get to see so many, your team as well. Do you have any themes that you can share with us as to what maybe founders or owners maybe struggle with, or what do you see? Any commonalities?
Yeah, I think the biggest challenge is going from a sort of non-professionalized organization to that professionalized organization, right? So engaging the right sort of legal counsel that has expertise in this marketplace and understands the challenges that they may be faced with on the regulatory side, headwinds that they may encounter in other areas, and then obviously the same line of thinking for accounting firms, right? Are they engaging an accounting firm that really understands the nuances of that healthcare provider space? I mean, there are very dental-specific accountants. There are medical-specific accountants. So are they really looking at those types of organizations? And the same thing with their banking partners. Are they looking at a transaction? And this is generally a challenge that we often see in the banking space and the commercial banking space, is that we're engaged for the purposes of a transaction, but at least at Provident, we're looking for the relationship. We want to ensure that we're supporting these organizations in that transaction and helping them grow over time and achieving whatever aspirations they may have. Some of them are not looking for liquidity events and a ton of scale. They're looking for some stability and that next level up. But ultimately, our goal is to ensure that they're encircled by the right sort of trusted advisors so they can operate thoughtfully, efficiently, and manage sort of bottom line risk and continue to grow top line.
So aligned there, everything you said. We see a lot of that as well. And when they do call you, you mentioned not all of them are looking for an exit. Some are doing X, Y, Z. What do they typically need when they call you? Is it for growth? Is it consolidating debt? Others?
Yeah, I'd say timing in the marketplace kind of dictates what you see more of, but broadly it's all of the above, right? Some of it's just a recapitalization. I may be called from a sponsor, independent or private equity, and they say, hey, we're a strategic, and they may say, hey, we're doing a recap, we're doing a roll-up, it's an acquisition, and so those sort of growth capital needs become more prevalent and likely. But on the flip side, it just could be a simple refinance request in this marketplace as rates start to come down a bit, and so those simple needs come up too. We have some larger, actually in the vet space, maybe an area that we didn't spend too much time talking about, but another attractive area as you have some of these larger vet organizations, vet service organizations continue to grow. We have some interesting opportunities to support some of the buying doctors into de novos. The vet space is a particularly unique subvertical where you often have them setting up new locations in each of their markets. And so there's doctors buying into those de novo locations. And so those individual doctors are looking at financing into that buy-in. So we're supporting those organizations as well.
Thank you, Vik. Vik, Miguel, is there anything that we didn't touch on that we want to talk about here?
No, I think we had a pretty robust conversation here. It's great to have you. We'd love if you have any final points you'd like to share with us.
Next time I come back, we're going to have to crack open a bottle of bourbon and do an after-hour special.
That's right. That's right. Yeah.
100%. Yeah, we'll have that ready next time. We failed you this time.
No, it's all good. I'm glad to be here, guys. I appreciate the opportunity. It's always nice to engage.
Of course. Thank you.
Vik, thanks so much for coming on. Miguel, awesome co-host. Thank you as well. I should ask if I'm listening and I want to get a hold of you, and I'm sure a lot of our listeners will. How do I get a hold of you or the team?
Yeah, no, first of all, I appreciate it. I think two simple ways. One is reach out to the Skytale team, to you guys, and I'm sure you'll put some folks in touch with me, as you already have. And then secondly, you can just look me up on LinkedIn. I think my handle is Banker Vik, BANKERVIK. So you can probably find me that way. Or I'm sure after looking at this podcast, you can just search for my very long name, and you'll be able to find me pretty easily.
Well, thanks again, and I think that's the best handle that I've heard to date. I mean, we have some really good ones in the aesthetic space, Injector Miguel, things like that, but Banker Vik, I like that.
I like Injector Miguel.
Yeah.
I doubt that's actually his handle, but if it is, it would be
You'd
pretty
be
cool.
surprised.
Yeah.
Well, thank you again, Vik. Very much appreciate
Thanks,
your
man.
time.
Thanks, Miguel.
Thanks.
And thank you for listening to another episode of Skytale Insights. We hope you enjoyed it and got some good nuggets, and thank you.